Alright, so I'm going to be making use of gold in this case, or we can make use of another currency, but let me just quickly use gold in this particular case that we are having here. Now, if you check clearly, we want to talk about chart patterns. Alright, I want to talk about chart patterns now. Now, we have different types of chart patterns, but I'm going to be telling you on the four major chart patterns we have. All right. Now we have the head and shoulder. Now the head and shoulder can always be like this. All right. For the head and shoulder, you're going to see the head. This is the head. This is the other shoulder, and then this is how head and shoulder can be. All right. Let me just quickly make here to be more clear. All right. So this is a head and shoulder formation whereby we have the head here going to be using H here, capital H as the head, and I'm going to be using S here as the shoulder level. All right. Now take note of this pattern. This is a chart pattern that anywhere you see it in the market, it always play out. All right. Now let me just quickly make it fast. Now this is the other shoulder. This is the other shoulder here, and this particular level here is going to be the neckline. All right. So as a trader, if you fail to catch out, because in a normal, if you see the head already, this is where you are meant to start looking out for an entry point. From this particular level here is where you can start looking out for. If you see this head and shoulder pattern, it's mainly for a short, meaning that the market can easily sell from there. All right, there you put out an entry point for a short position from this other shoulder level here. Make sure your stop loss is just below or around this point here, and your next target is going to be within the downside because this market is possibly going to break out this neckline. But if you want to be more confirmed on this stuff, it's better you wait after a break through from this neckline here, then you can start going in for the next shot from there after a break from the neckline and putting your stop loss a little bit and targeting the next down for the head and shoulder formation. Now we have the inverse head and shoulder, which is mainly like this. All right, this also is mainly the inverse head and shoulder formation. All right, so let me just quickly make it fast here. Now you already know how it is. You already know that this particular point here is the head and the two shoulder, which is the same thing I draw out on that particular level. Here is the head, here is the two shoulder, and here is going to be the neckline. Inverse head and shoulder is mainly for buy. Are you getting the point? This is the neckline. You can wait after a breakthrough from this neckline to start getting in for the next buy all the way to the upside. Or if you fail to catch the area from here, then you can possibly catch in the area from here. Because as for me, this is where I normally get in from. This is where I normally get it from for the next possible buy from that level to the upside. We are going to check out three chart examples so you can see what I mean. Now, the other pattern we have is the double top and double bottom. Double top and double bottom is just like an M shape. Are you getting the point? Double top and double bottom is just like an M shape whereby this is the neckline there. All right, this is the neckline there. You can mostly confirm this double bottom and double top formation after a breakthrough from the neckline. But if you want to wait, you have to wait until this market decided to trip in from this particular point here for the next possible buy from this particular point. This is a double bottom scenario. This is how double bottom formation looks like. All right, so this is how to get in for a double bottom formation. If you want to long this, then you can go in from this particular point after a breakthrough from the neckline there, put your stop loss a little bit below and then target the next upper level there. Are you getting the point? I'm just using this scenario. We are still going to look at on the live chat so that you can see how it works. Then for the double top formation here, you can go in for a short after this trigger from the neckline there and then put your stop loss a little bit above that level and target the next down. Now, that is what I told you as if you want to be more confirm on this, but if you want to go in drastically, then this is where you are meant to go in from. As for me, this is where I normally look at for my entry point from to the downside. Right. I don't normally wait because for me waiting and if this market decided to break out yet, I've lose few pips if you understand from this particular point here to the downside. All right. Now When you can see this double top formation mainly is when the market is clearly on an uptrending movement. Sometimes if the market is trending up and gives you the new high, if the market want to start pulling down, it can gives you that pull down in a double top manner, alright, like this. Alright, are you getting the point? Now the same thing applicable to the up the downtrend movement. Alright, for the downtrend movement, you can always find double bottom there. Alright, you can easily find it in any other movement, but remember, for you to find solid double bottom, it has to be trending down. The market has to be pulling down in this particular manner like this. Alright, so if the market is pulling down like this, then you can always find double bottom that will trigger the next movement to the upside as a reversal. That is why most of this chart pattern you see me draw, which is the head and shoulder, the inverse head and shoulder, the double top and the double bottom, are mainly a chart pattern for reversal formation. Alright, we also have the one like this, but this one is sometimes it's hard to find in the market. We have something like this. I don't know if you can recall, Sha. I don't know if you can remember this formation. But you have something like this whereby you are going to make use of these levels here as a triangular pattern formation. All these are mainly reversal. This one can always occur at any given time. Alright, whereby the market is going to be reacting in this particular given direction until finally there will be a break through from any point. Alright, are you getting the point? You're going to mark it out like this. Now, as a trader, what you are going to be observing in this kind of formation is that you don't clearly know the direction, but if this market is trending up like this, let me just say this market is pulling up like this and gives us this kind of formation here, then I'll be suggesting for the next possible buy because the market can easily push or go all the way to the upside following the trend of the market. Are you getting the point? And if the market is clearly bearish, let me just say the market is pulling down like this in this particular manner, pulling all the way to the downside like this and gives us this particular formation here, then we can easily expect the market to pull to the downside, giving us that same movement, directional movement to the downside. But if you notice that this market it does not have a clear direction, or if you notice that this pattern, this is just giving you a market pattern here. So as a trader, what you are just observing is that if the market break through below, if the market break through below here and gives you a candlestick closure, it must be from the 30 minutes or from the 1 hour candlestick. If the market close below here using the candlestick closure, then you can start going in for the next possible sell from that particular point for a short position there, then putting your stop loss a little bit above that line level here, and then you're going to be targeting the next possible down level from there. Are you getting the point? And the same thing applicable to the upside. All right, if the market close above the range, all right, the market close above here in a closure, then as I said earlier before, it has to be from the 30 minutes or let me just say from the 1 hour time frame there. And then you can start getting in for the next possible long position from there and then targeting all the way to the up level. As simple as that. I told you there's no two ways around it. So that is just how it is. Remember, as I said earlier before, the head and shoulder, the inverse head and shoulder, the double top, the double bottom, and this is a triangular formation in which we just marked out here. It's a triangular pattern. All right. So let me just quickly look at the chart so that we can try to spot out most of these things. They don't always occur in the market, but you can still easily find them. Alright, you can easily find most of this pattern there. Now, you just have to train yourself in a way that you can easily spot them. If you are new, you can hardly spot those things. Yeah. But if you have been long in the market, if you are consistently watching out on the chart, then you can easily find those patterns. Now, looking at this one, we have a particular pattern here. What is that pattern? Okay. I'm going to leave you in the next 5 seconds to tell me what that pattern is. You can drop it. All right, now this is a double bottom. I told you this is a clear movement all the way to the upside. You can see here that the market is clearly bullish all the way to the upside. All right, now giving us that, if you notice, the market came to this level and then gives us this scenario in which is the double bottom formation. Look at it here. All right, after giving us this double bottom formation here, you can see the way the market skyrocket after breaking the neckline. You can jump in for the next possible buy, but sometimes you can see here the market retrace back to that neckline again, giving most traders that fail to go in a next opportunity for the next possible buy all the way to the upside. So as a trader, if you miss out for the next long from here, then it's not always the market will give you opportunity. If you miss out on this particular movement, because this is where you are meant to go in for the next possible buy, as I said earlier in the chat, after a breakthrough from the neckline, all right, you put your stop loss a little bit below and target the up level there. All right, so the market is not always going to give you a retracement. Sometimes there will be a retracement, sometimes there will not be a retracement. So if there's a retracement, you can still go in from there to the next up. You can see after that, you can see the way the market trigger all the way massively to the upside. This is good. If you catch this kind of movement on good, you know how it's going to play out. So let me just quickly check out more. Let me know if I can easily find them. All right, you just have to train your eye, as I said. The way you can train your eye is to be consistently looking out on the charts. As simple as that. Let me just use the 1 hour time frame as an example. You can mostly find them in different time frame, but I just want to use the 1 hour in this case. Let's keep checking out. Okay, this is the one we just spotted out here. Let's keep checking if we can easily find any other one. Now, if you check clearly here, this is a double top formation here. All right, if you're looking out on it, I normally tell you guys, and I normally tell you that it's just like an M shape. It can also serve as a reversal to the downside. As simple as that, because if you look at this market here, clearly, if you look at this market, it was kind of bullish. I told you earlier on that it was kind of bullish from here. This market is in a bullish formation, gives us the next possible high there. But that high was giving us as a what? Double top formation, M formation. This was the double top. You can see here, you can see the pullback and then back to the next other formation and then are you seeing it? This is the neckline. This is where I tell you to normally look out for the next confirmation for a breakout and a closure. All right, this is how I normally tell you. If the market breaks below that neckline, make sure there is a closure there. You can see after the closure from there, then you can start getting it for the next possible short from that movement. After the possible closure, putting your stop loss just a little bit above the neckline formation there, then target the next down part. As simple as that. As simple as that. This pattern is very, very strong. That is why I decided to mention this four pattern. That is why I decided to mention this four pattern. So let's quickly check out for more to know if we can easily find them. Alright, this is also a double top formation here. Alright, but some will not work perfectly. Some will just move massively and some will not. Alright, you can see it. They are always like M shape. Alright, they are always like M shape. You can see this is our neckline here. And after a break below the neckline, the market dropped drastically all through to the downside and still gives a possible pullback. You can see it here. The market pull back, tap into that neckline formation, and then still drop massively to the downside. And that is not all. The market still decided to pull back again to that neckline formation there and still drop massively to the downside. You can see it. Alright, you can see that is how they normally plays out. That is how the markets can always be sometimes. Alright, so you just have to know when to get in and when not to get in. As simple as that. So let's quickly look out for more if we can easily find. Alright, you can see I've been seeing double top and double bottom. Double top and double bottom. You can see this one also is a double bottom formation. It's always, I told you, if you see double bottom, it's a buy. If you see double bottom, it's a buy. If you see double top, it's a sell. So looking at on this point, the market gives us a double what bottom formation, which trigger for the next possible buy to the upside, and the market retest back on that neckline level and still give the next possible buy from there. Alright, as simple as that. So you just have to master this pattern. You just have to master this pattern. I want to find one head and shoulder formation here. Alright, this is kind of giving us a head and shoulder formation, but it's not too clear. But as for me, it's kind of clear, but I want the one that will be more clearer for you. Now, looking at on this point here, what I see here, these two levels here is the shoulder point. Let me just clear mark it out. Let me just clear mark it out so that you can easily highlight it clear. This is the shoulder, this is your head, right? And this is the other what? Shoulder. Are you now seeing it clear? You can see it, and this point here is our neckline. All right, the market gives us a good neckline from there, which is this clear point here. You can see after the market decided to break above that neckline, you can see the way the market triggered all the way from here to the outside, and it still gives a pull back to that same neckline, which is this pullback. If you did not meet the market there, then you can possibly jump in from this particular point also there, and then just make sure you put your stop loss a little bit below that zone, and then you are going to be targeting the next upper level here for the possible gain on that. All right, that's how it is. You can see that the market always reacts. It always retests back to the neckline formation before the next buy. For the double bottom and for the double top, it always reacts to the neckline. So you can also keep watching out for that reaction as a retracement back to the neckline for the possible entry point from there. All right, let's keep checking out if we can possibly see another one there. Alright, now if you check clearly here, we have another one here. This one gives us in a kind of massive formation there, which is clearly this. Alright, looking at on this point here, we are having that possible shoulder level here and the head. The head has to come out. You can see the head normally come out here. So that is just how it's meant to be, right? So this is our shoulder level. This is also our head level there, and this one that we are having here is also our shoulder level here, and this here is our neckline. Are you seeing it? Is it not the same thing I draw from here? This thing now, let me just quickly make it fast. Is it not the same scenario in which, okay, I draw it on Euro USD currency pair? So that is the same scenario there. All right, exactly the same scenario there. You just have to keep learning. You just have to keep watching out on the market for your eye to be open on this. For me, I don't have to look it twice. If I see it, I will know. If it's not there, I will know. All right, you don't have to look it twice. You can see that after the market break out of that neckline, you can see the way the market push all the way to the upside. Alright, so that is just how it is. That's why I told you guys that sometimes I don't normally wait out for the neckline. If I see the one that will be perfect for me, if I see a perfect one, this is the possible point whereby I'll be going in for my entry point from there, putting my stop loss a little bit below that level there, and then my target is going to be to the up. My target has to be above the neckline, right above the neckline, because the market is going to trigger all the way from the neckline. So what I want you to do now is that go to others currency pair and check out for this pattern I've highlighted so far. Remember the head and shoulder, the inverse head and shoulder, the double top and the double bottom formation. Check out for most of those patterns. Different currency pairs, screenshot them and send it to me. If they are correct, I will tell you. If they are not correct, I will also tell you. That is how we learn. Alright, that is how you have to keep learning, keep mastering until you understand the psychology behind most of these. Alright, so that will be all for now. I'll be making video based on the other contents that we are meant to have. Alright, also.